Thank you for joining us today, and welcome to a joint webinar presented by Smith, Gambrell Russell and Corporate Payroll Services. Today's topic will be on the Paycheck Protection Program through the CARES Act. Today's webinar will be approximately 1 hour. At the latter part of the webinar, you may type in your questions to be addressed by our panelists in the Q&A section of your screen. Please note we will email a link to watch this recording along with a PDF copy of the presentation to all attendees within the next 24 hours. Our presenters today will be Everett from CPS. Everett has been in the payroll industry for 20 years and held key payroll operations and management roles. Her current focus on special customer projects has led her to the CPS liaison for the COVID-19 team. Next, we have Mark Latman, a partner in SGR's corporate and global transport practices. He's also co-head of the firm's COVID-19 legal task force team. Next is John Spillman, a partner from SGR's corporate practice with a particular focus on M&A transactions and franchises. John is also a member of SGR's COVID-19 legal task force. And wrapping up, we have the Q&A portion. We have Juanita Hardy, a corporate trainer from CPS. Now I'd like to turn it over to Everett.
Thank you, Jaleesa. Just a little introduction about Corporate Payroll Services. I know most of you are aware about our services. I do want to highlight one aspect, a new feature that we have, which is Come On Board. It allows our HR onboarding platform, allowing you to add your employees as you go. Thank you. I'll turn it over to Mark.
Thank you very much. And just for a brief introduction of Smith Gambrell, we're an international law firm, and we have 10 offices worldwide, and a map here that shows the predominant number of our U.S. offices. We consider ourselves a full services business law firm, and we very much appreciate the opportunity that Corporate Payroll Services has given us to present to their clients. So thank you very much for that. Just a brief introduction, to the Paycheck program itself. It all falls under the CARES Act. Many of you may have heard that that term thrown around for several weeks now. It was passed by Congress back in March 26th, and then that same day signed into law by the president, and that is what the PPP loan program falls under, as well as many other programs, including the extension of unemployment benefits, and as well as some benefits to the airline industry and airline industry workers. Pardon me, with just a slight technical difficulty there. The Payroll Protection Program, itself is designed for small businesses. We put quotes around the small businesses because usually a program run through the SBA is limited to a very specific definition of small businesses. This program is a bit larger than that, and intentionally larger than that, and really was the mechanism to make sure that the workforce in the United States was as best possible kept at the same levels as it had been pre the coronavirus breakout. This payroll protection program is viewed as an important aspect to that, because what it does is it pays the equivalent amount of a loan equal to 8 weeks of the payroll expenses of your companies is the amount that it becomes available. So presumably, if that money is then spent on your payroll for the 8 weeks once you receive those funds, that has an ability to keep people employed whether they're actually working or not. Obviously, with this with the pandemic going on, many of us, as we're all sitting here right now doing this webinar from from our homes, many of you are at home as well, certainly if you're not classified as an essential worker and not in the office, and that obviously makes it difficult for many people to carry out their work. And the idea behind the program was to ensure that those people remain employed, and the way of doing that was to make it, for the most part, a no-cost effort, a no-cost investment by the employer. So the loan program, again, is intended, it matches up with your payroll expenses. Up to 25% of it, which we'll talk about a little bit later, can be used for non-payroll expenses. The term of the loan is technically for 2 years, with the first 6 months of the loan having deferral on principal and interest payments, meaning that there are no payments owed during those first 6 months. During those 6 months, though, you would also be applying for forgiveness of the loan. So probably the most important aspect of the loan is that it is meant to be forgiven. If you meet the qualifications for receiving the loan and you spend the money that you receive correctly under the loan, which we'll go through later on in our slides, you should be eligible for forgiveness, and that forgiveness means both principal and interest. So at that 6 month mark, hopefully there would be nothing for you to pay back, so that additional 18 months of those 2 years becomes irrelevant. At that 6 month mark, the loan should be forgiven, and I think beneficially as well, when that's considered forgiven, the way that the law was written is that also doesn't constitute income to the employers, meaning usually if you have a loan forgiven, it's as if you were given the amount of money, and it needs to be included in your revenue or your income for the year and get taxed on it accordingly. In this instance, the idea is that it does not become part of your annual income. Another nice feature of this loan, for those of you who may have received other SBA loans, there's no fee associated with it. It is non-recourse to you. There's no collateral that needs to be put up, and no guarantees that need to be made. Again, the idea being the loan is meant to be forgiven. So a number of these things just doesn't make sense to include, and obviously would complicate the process of having monies sent out to the employers for distribution to the employees. So all of those things were dropped as part of this PPP loan program. Should the loan not be forgiven for some reason, and you do have those 2 years to pay it back, the interest rate on the loan is only 1%. It is statutorily locked in at 1%. So again, that's to me that's a find somewhere else where I can get a 1% loan, and I'll go take it. Another thing that people on this call may be aware of and may have applied for as well through the SBA is something called the Economic Industry Disaster Loan, or the EDL. I think that's the first loan that became available when the pandemic started. So many people, many companies were out there and applied for this loan. It fits much more within the traditional SBA loan programs. You need to demonstrate that you've been financially impacted as a result of the coronavirus. There's a limitation of $2 million on this one for what you're able to cover. The interest rate, as you can see, 3.75% and 2.75% are significantly higher, and there is no forgiveness of this loan. That's why I say it's much more of a traditional SBA loan program. I do believe they have waived a number of the other sort of normal requirements. Again, for instance, I don't believe it needs to be collateralized in most instances. And one of the nice features of this loan, if you have applied for it, is the first thing that happens is you should receive a $10,000 advance, emergency grant of money, within those 3 days of being approved for the program. And that money, if you're later on found that, within 3 days of applying for the program and the application being accepted, one of the nice pieces about that emergency $10,000 is obviously it's needed. And then, if for some reason the loan is determined, that it's determined that you don't qualify for the loan, that $10,000 advance is not meant to be repaid. It is a grant from the start. And probably one of the things that most people have asked us about it is, can you receive both the EIDL loan and the P3 loan? And the answer is yes, as long as you're not using the loan monies from the P3 loan. For the EIDL loan for the same reasons that you have applied for the P3 loan. So again, I think the EIDL loan is much more broader for operations and in general that you can spend those monies on, whereas that P3 loan is really meant to have those monies flow down to the employees. I think with John, I'll turn this next slide over to you. Lisa, if you can go ahead and unmute John, that would be helpful.
Sorry about that. Thank you, Mark. As Mark said, the PPP program is a SBA is run through the SBA, and it's intended to help small business get through the COVID-19 difficulties. The part of the eligibility requirement is what is small, and small in this context is a pretty broad spectrum of businesses, but from very small mom and pops up to businesses of 500 employees or greater, as we'll talk about in more detail. It is at the higher end of that size threshold that is where there's been a lot of confusion on eligibility. There were a lot of fine points that had to be clarified. Some have been clarified, some can use further clarification, but in general, eligibility for the program, you are eligible if you are a business with 500 or fewer employees resident in the U.S. After application of all of the affiliate rules and counting the employees of affiliates. We will talk about that in more detail in just a moment. There are exceptions that if you have greater than 500, more than 500 employees resident in the U.S., there are some other exceptions to that rule. If you would still be eligible if you have more than 500 employees, if you're a small business concern as defined in the SBA, that each industry group has been categorized by the SBA as being small or not based on, in some cases, employee counts, and in some cases, revenue amounts. And if you are more than 500 employees and you want to see if you're eligible, you need to go to the SBA's website and see if your industry has a higher employee threshold. This is just an example. Manufacturing, many manufacturers have more than a 500 employee threshold. The column there on the right that is showing on the slide is the employee count. In some industries, there's an alternative revenue threshold that you would be eligible for also if you were under that threshold, and but over 500 employees. Finally, there is another test that's been clarified recently. It's not on the slide, but there's sort of a catch-all test that if you, I don't have it, but there's a revenue test. I think it's something like under 15 million in revenue. I mean, under 15 million in tangible net worth. So your tangible assets, and if you have average net income for federal tax purposes of less than 5 million for the past 2 years, that is also a small business and could qualify you if you have more than 500 employees. There are a couple of specific sector exemptions to that, or specific sector exemptions, and in particular the hotel and restaurant industries, which is NAICS 72 codes. The Congress recognized that those industries were very hard hit, and for those basically hotels and restaurants, if a single business has multiple locations, each location will be considered separately for the 500 employee test. So each location could have up to 500 employees, and it would still be a small business even when you put it together. All of the tests that I've just talked about, the revenue test, the 500 employee test, the alternative employee tests, are all applied, and the eligibility is determined counting all of the affiliates of the business that's applying under existing SBA rules, which are fairly complicated. But as a general rule, any company that is under common control with the applicant or that controls the applicant, whether that is a controlling shareholder, whether it's under common management arrangements, and in some cases, if they have a common minority shareholder that exercises control through veto rights and other things, all of the employees of the affiliated businesses are counted before you apply the 500 employee rule and all of the revenue and alternate rules that I've just talked about. And that has been a big and confusing problems for a lot of businesses at the higher end of the spectrum in determining whether they are eligible. For example, private equity, businesses with private equity and venture capital investments are lumped together in general under these rules with the other portfolio companies of those private equity investors, and an entrepreneur controlling multiple businesses. All of those businesses are added together if the control tests are met under the SBA affiliation rules. There are two major exemptions in the Act. Again, the hospitality and restaurant sector, NAICS Sector 72, is exempted from the rules altogether. So you just have a 500 employee per location test generally for those. Also, companies or businesses that have any investment through a small business investment company licensed by the SBA, SBIC, is also exempted from the affiliation rules. And this is actually turning out to be a bit of a loophole. A lot of companies have growth capital, mezzanine loan capital from SBICs. And if you do, there appears to be a blanket exemption from application of the affiliation rules.
Thank you, John. I think we've also learned that, you know, a number of the people in the audience may be franchisees, and I think that's another one of those exemptions under the rules of affiliation. They wouldn't want to see these you know, the franchisees lumped up with the, you know, with the franchisor in any manner. So there is an exemption for that as well.
Yeah, you're right. I'm sorry I left that one out, and that is the SBA had an existing franchise directory for purposes of SBA loans. Under the affiliation rules, in some cases, a franchisor and a franchisee could be lumped together. There is an exemption from the affiliation rules if the franchisor is on the directory and they've recently made they've made it easier to qualify for that directory and expanded the list of franchisors on it. But if you were a franchisee of a franchisor on the SBA directory, then you don't have to worry about the affiliation rules applying in that case.
Great, thanks, John. So just other other sort of qualifying business types. We talked about the the SBA general definition for small businesses, but again, more was any business concern that fits within those numbers and revenue thresholds we've talked about. They've also added in nonprofit organizations, but particularly only the 501c3 organizations. Not so sort of the charitable organizations that that we think of as 501c3s, and then what is often now referred to as the gig worker, in the gig economy, and this is the Uber drivers, the Lyft drivers, the DoorDash, delivery folks. It's much more than that, but this act was meant to capture those people and make sure that they can have the same sort of benefits and apply for these loans as well. Probably the biggest one that we hear about is the independent contractor, and we'll see as we go through some of these slides in a minute. Is the independent contractor get calculated into what I'll refer to into the employer's numbers for head counts, and then for payroll amounts, and then for eligibility of payments out of the loan proceeds. So those are some big questions, and I think the answer has come down is that the independent contractors should be treated as independent contractors and apply for this loan, for this type of loan themselves, and that's why you see them here as being eligible. Other types of businesses that you might not always stand out that qualify are veterans organizations, and then tribal business concerns that constitute small small business concerns under the SBA. Another qualification is that the business itself had to be in operation by February 15th, 2020. You'll see some of the measuring, the measuring sticks for determining how much of a loan is available may go back into 2019, but there are exceptions to that, because there is an appreciation that a business might not have been around for all of 2019, but as long as by February 15th, 2020, the business was in operation, you can get support under this program. The idea being, if this is about the pandemic, if that's about the time it's considered the pandemic had started. So if you were so if you started a company after that point, I guess the view is you went into it eyes wide open and you knew that it might be a problem, and you should have been prepared for it. But that's just the way the rules work. Going through the amount that's available to you if you do apply for the loans. So there is a cap of $10 million on the loans, but probably for most employers, they're looking at a lesser amount, and it's 2.5 times the average monthly payroll costs. This is what I was talking about, where if you weren't in business the entire year before, it's the average monthly payroll cost for the year prior. So that's for 2019, or you can go back to the entire calendar year in 2019 and use that. If you weren't in business, for that period of time, you then can opt to use the January 1, 2020 to February 29th, 2020 to determine what your payroll was, to figure out what amount of money you should apply for in relief. And then they even took into consideration the seasonal employers. So it's the 12-week period that began February 5th, that begins February 15th 2019. Again, I think the idea is if you were a seasonal employer for a period in the fall of 2019, or you're a seasonal employer in for this coming summer, that doesn't fit the pandemic time periods. So you wouldn't, in their mind, you wouldn't have been hurt by the pandemic, and therefore aren't eligible for the loans at this point in time. And with that, go ahead, John, please.
Well, the feature, the key feature of the PPP loans is that they are forgivable. If you spend the money in the way that they are encouraging borrowers to spend money, the loan will be forgiven and effectively becomes a government grant. In order for the loan to be forgiven, you have to spend it the way they are asking you to spend it, and then the borrower's got to apply to the government for forgiveness and make various certifications and as to how they spend it. The spending has to be, you have to spend it during the 8 weeks after the loan is first dispersed. A lot of businesses and clients are saying, can we extend that? Can we wait? Because now we're shut down and it won't do us any good to spend it right away. But that is the rule, and it's part of the design of the act, because they are trying to encourage businesses to retain employees on payroll during what they estimated when they passed it to be an 8-week period when things would be idled. So during the 8 weeks following the first disbursement of the loan, expenses that are spent 75% on payroll. First of all, you have to spend 75% on payroll expenses. And again, as Mark described earlier, that's a broad definition of payroll and related payroll expense. The other 25% can be spent on rent, on mortgage interest, but not on principal, and on utilities. The rent, mortgage interest, and that's not just real estate mortgage, it's also secured debt of any kind. The non-payroll expenses have to be for obligations that were existing obligations on February 15, 2020. So they're trying to discourage people from gaming the system by entering into new loans or leases in anticipation of this benefit. So if it is a new lease or a new loan, that will not qualify expense. The amount of any forgiveness is going to be decreased in relation to decreases in headcount and wages below, if wages are reduced below 75% during that 8-week period after the loan is disbursed. And the way they do that, it's a bit complicated. They've issued some clarification. They may issue some more clarification, but on the head count, they compare the head count, the average head count in the 8 weeks after loan disbursement to either head count between February 15, 2019 and June 30, 2019, or to average head count from January 1 to February 29th of 2020. The borrower can decide which the comparison period is. And they do that by comparing full-time equivalents. They define full-time equivalents, I think, as 30 hours. So if there are temps, two temps at 15 hours would equal one full-time equivalent. The wages, the test on the wages is compared to, and then they will, going back to the head count, they will reduce it proportionately. It's not all or nothing. It is a proportional decrease in the forgiveness. On the wages, it's dollar for dollar. If the average wage for the employee is reduced by 75% compared with the 8-week or the last full quarter before the 8-week period kicked in for that employee. Restaurant or businesses.
Sorry about that. Go ahead.
Businesses where employers rely on tips can pay to make up for that tip, and it would be eligible for forgiveness. I'm sorry, Mark.
That's okay. I'll go ahead. I'll take on the this piece of it. So John just went through the types of things that could reduce the forgivability of your loan, and the drafters of this legislation understood that the legislation was following the outbreak itself, and obviously companies took actions, whether it was furloughing workers, reducing salaries, terminating employment, went ahead and took actions, and they didn't want to penalize those people, not knowing that the government was going to, step in any way, and particularly try and protect those jobs of employees. They developed a way to kind of restore your right to forgiveness. So both on the headcount side and on the salary side, they will, anything that occurred, those decreases that occurred between February 15th and they say 30 days after the enactment of the act. Again, I think I said earlier it was I think it was March 26th or something like that. So that brings us to April 26th. So anyone that has, had their, that laid somebody off during that time period, or reduced salaries, furloughed people during that time period, have a chance to restore both that head count and those salary cuts from those time periods. So, for example, if on February 29th you made the decision that we needed to reduce our workforce by a 10% head count, there's a way to it doesn't disqualify you for the loan, nor does it necessarily outright disqualify you for forgiveness. However, if we get to May 15th and then you decide that I now need to go through layoffs, and you start laying off your workforce, those layoffs you would not be able to restore your right to forgiveness during that time period. So again, the idea was, if you didn't know that this loan program was going to be available and that you would be able to have your employees' salaries covered during this time period, they understood that and wanted to allow you to still be eligible for the loan program. So both on the salary and the headcount decreases, if you fix those by June 30th of 2020, presumably that's when people would start applying for forgiveness of the loan. You could still qualify for 100% forgiveness. Otherwise, as I think John alluded to before, the amount of your forgiveness would be proportionately decreased by what you did with the employee headcount and the employee's salaries. Continuing on, as far as we've talked about the possibility of getting 10 million up to $10 million, but it's based on your payroll costs, 2.5 times your payroll costs. And so the question has become, what does constitute payroll costs? You'll see here all the types of things that you that you would expect, but it also includes the benefits that that you provide, whether you kick in for people's 401ks, whether you pay a portion of healthcare expenses. That goes into what constitutes a payroll cost for determining how much you can it's hard to use the word borrow when the idea is meant that it gets forgiven, but the amount that you're going to apply for a loan for. What is not eligible in payroll costs are the portion of an employee's salary that exceeds $100,000 or the equivalent of an annual salary of $100,000. So it isn't, unfortunately, it's not just a look and see what did that person, what was that person's paycheck for during the relevant period, but it also includes factoring in those employee benefits, the healthcare, the contributions to 401ks. That all gets included in what's determined in the in that $100,000 limit. So any of those expenses in excess of that $100,000 do not get included as far as an eligible payroll costs. The independent contractors we talked about a little bit earlier, you're not going to include them in your payroll costs. Anyone who performs their primarily performs their work outside of the U.S., their salary would not fit within the payroll costs. And then if there have been other benefits, tax credits under the CARES Act itself, then the government isn't going to allow you to double count. So if the government is picking up those costs elsewhere in another portion of the CARES Act, they don't want you to be claiming those as money that you have to pay out to keep your employees employed. Qualifying use of the forgiveness. This is what John talked about earlier. So I don't think there's really a need to go into it anymore. The only thing that I will mention, again, as John has mentioned, I think I've mentioned it before as well, is that there is a limit on the amount of the proceeds of the loan that you can use on non-payroll amounts. So that is that 25%. That 25% number. So make sure, because again, the whole idea behind the program is to keep people employed. So make sure that the money is going towards those payroll costs, and you're within that 75% of those monies are going towards the payroll costs, so you don't run afoul of this rule. And with that, Efren, I'll turn it over to you for a little bit to talk about how CPS can help its clients.
Thank you, Mark. As Mark provided a great detailed explanation of how to count how your payroll costs, what to factor into your payroll costs, just a little background as far as your payroll cost is going to help determine a few things. One, it'll determine your eligible loan amount. It'll help you determine the loan forgiveness, how much you can have forgiven for your loan. And then also payroll costs will go towards determining your qualifying for cure during the PPP implementation phase, which is between February 15th through April 26th of this year. And then also headcount is important towards these calculations. The average employee headcount for determining qualification for the PPP loan. Headcount is also used to determine the forgiveness portion, and then headcount will be factored towards qualifying for cure during the PPP loan implementation phase. For our online customers, and also if you do not have online access, you can always contact your payroll specialist. We do have a new report available online. So if you could see on the screen, you'll be able to put in the pay period, the period date that you are required to provide. Your lender might be able to provide guidance, But for us, we do default it to the current 12-month period. So it'll go from April 1st of 2019 to March 31st of 2020. You're able to apply or exempt specific pay types from this calculation. We've automatically removed independent contractors. Any payments that you've paid to those would be removed from this calculation. And then you can also input the 401k employer match, also health insurance that you've paid, the company has paid towards your group health plan can be entered on the input screen. So the result will be a report similar like to what you see now. We do have the wages, anything over 100,000, the wages are capped, but it's very important for you to understand any healthcare benefits or also retirement 401k or employer matches that you provide. Since we would not have all of that information, that should be factored towards your eligible earnings. All right.
Thank you for that. So we did want to go ahead and point out a couple of other, provide you with information about other relief programs that we've become aware of. And particularly, there's a very good website put out by Duke University's business school, and the website appears here, and it is actually an international listing. They've been doing a very good job of keeping track of benefits that are available, from governments as well as from private sources around the world, and then maybe more importantly, within the 50 states, as well as from the federal government. So we certainly do recommend that people take a look at that, as these slides will be provided to you tomorrow. No reason to particularly quickly try and jot these long URL addresses down, but we wanted to bring these things to your attention. Let's see if I get the slide to move the way I want it to. And then again, the information John talked about, about the sizes of, what constitutes an industry, appropriate industry size for the SBA, or what constitutes, a recognized franchise by the SBA. These are the websites that would help you determine that. Again, I think there's a size by head count, and there's a chart by head count, a chart by by revenue amounts, and then again the franchise directory. John, can you shine a little light on this franchise directory? Wasn't meant for the purpose that that people are currently using it for. Meaning, 2 months ago, if you looked on here, you might not find your franchisor, because there was a specific reason why this existed that is not really applicable for for the SBA loans.
Yeah, it has been maintained for a while in order to facilitate sort of prepackaged SBA expedited approval and of SBA loans for franchisees when their franchisor set up the program and met the requirements to be on the directory. When the CARES Act made the exception for franchisors on the directory to exempt them from the affiliate rules we talked about, they also recognized that the existing criteria for being on that were too narrow for this purpose, so they made it easier for additional franchisors to get listed on that directory, and we've seen a lot of franchisors that were not previously listed on that today, and the online link there should be pretty up to date, so you can look if you're a franchisee and see if your franchisor is on that if they've not communicated that to you yet.
Great, thank you. Yeah, I do know we've seen a lot more get added to that list for that, for that purpose. And I do think there's some guidance out there that just getting added to the list doesn't, I guess, necessarily, it'll qualify you for purposes of the P3 loans, not meant to be used for, for that other purpose of, the package of loans available to those types of franchises. And then with that, the For those of you that have not applied yet for the loans, this website, which I always found a little bit odd as we talk about it being available under the SBA, and I know you can get there through the SBA website as well, but we find a lot of the relevant information, including the application, on the Treasury website at treasury.gov, and including the FAQs, the frequently asked questions, which is updated on a near daily basis. As a matter of fact, before this presentation this morning, John and I took a look on there, and there was an update yesterday to the frequently asked questions. And while it's not necessarily binding guidance, it is good guidance as to how the banks are going to look at your applications, how you should, including how you should complete your applications, and then how the government should treat the sort of the forgiveness pieces of the loans. So again, that website link is a good resources for all of these things: the loan application, the frequently asked questions, the eligible lenders. I guess that's one thing we should briefly chat about is, if your banking relationship isn't an SBA sort of qualified lending institution, there are lists of lenders that are eligible for that purpose. There are some organizations out there that will help match you with an SBA lender. All of those services should be free of charge to you. Those, any fees associated with, sort of call a finder's fee, should be paid by the bank itself out of the monies that it receives from the federal government for making the loan. So if anyone is asking you for money to help connect you with a lender, it's not appropriate. The lenders themselves, then it's probably not a legitimate service. I guess that's the first thing I would say. And the money should be paid out, paid by the lenders themselves. So not something you should be paying. And then again, the affiliation rules, there is some guidance on the sort of complicated affiliation rules. So if those, if you think those might apply to you, there's some parent organizations above you or investors in you that are investors in a lot of other companies, and they own more than 20% of your businesses. That is something you will want to pay attention to. And then lastly, both CPS and SGR have a portion of their websites dedicated to the coronavirus issues and the types of questions that you answer. Hopefully guidance on some of the questions that you have, or guide you to resources to help you answer some of those questions. So 2 additional good links to follow. And with that, I think we're going to be brave enough to open the floor to questions that people might have. And I know Juanita was hopefully going to monitor if we did receive any questions. And so Juanita, why don't we turn it over to you for now?
Okay, thank you so much, Mark. We do have a lot of questions here. A lot of them stem from, I'm going to try to ask a multi-part question here because a lot of them are very similar in headcount. If you have applied for a loan, but your headcount changes, either during the application process, you've had to furlough some employees, or some have had to quit or take a reduction in salary, can you change the amount that you requested once the loan is approved?
John, would you like to take that one, or would you like me? I'm happy to take a shot at it.
Well, if the question is, can you change the amount of the loan that I suspect that they would let you draw less than you were approved for, but I'm not sure about that. The question.
Yeah, I think it would probably go to a couple things. It would probably go towards the forgiveness piece. And maybe one thing we did forget to say is you can turn back, you can prepay portion of the loan, without penalty or anything like that. So if for some reason you found that you were taking out more money than you actually needed, and you didn't want to have to pay interest on it because it likely wouldn't be forgiven, you can pay it back during certainly as soon as possible, and certainly during those 6-month period. Again, it doesn't make you ineligible for the loan. It just decreases the amount of eligibility towards the forgiveness piece. So so keep that in mind. And then the other thing I'll remind you about is that it turns into a 2-year loan at 1%. So if you question whether you want to turn back any of those monies, as long as you're not making any sort of misrepresentation, which you wouldn't, because it'd be during that forgiveness phase where you would identify what your payroll salary amounts are and headcount amounts are.
And
Okay.
to get to one other part of that question, as we mentioned earlier, if you've had to furlough some people in between, after mid-February and before late April, then you're given until June 30 to make that up for purposes of these tests for forgiveness.
Right, and I think the idea behind that being that it's money that's there and available to you. Why wouldn't you put those people back on the payroll? In theory, it shouldn't cost you extra money to be able to do it.
Okay. My next question, and looks like we went up 20 questions in the last 5 minutes. We'll get as many answered, guys, as we can today. The next question is, as an owner, I am not on payroll but take monthly draws or disbursements. Has there been any guidance given to this?
I've seen that question asked a lot, and I've not seen exceptionally clear guidance yet. Mark, you may have. I think the answer is yes. As an independent, you can take it one way or another, but I've not seen the guidance clearly on that yet.
Right. I mean, I think one of the things that we have been, when there's lack of clarity, I think we have we have suggested being transparent about what you're including, why you're including it, and applying based on that. So if it's essentially like being an employee, then I would try and put those numbers in and report it, and you might want to asterisk it and explain what it is and how those amounts are, how those amounts were arrived at, but because the other side is, again, if you're a sole proprietor, if you're there are ways to be receiving money, and it may be a matter of applying separately. Okay.
The next question is, if you've applied for a loan, say the loan was applied for on April the 8th, and this person has applied for the emergency loan 4 times and hasn't heard anything, do you have any suggestions, like can they apply for another bank?
So I think that's another question that I think there are multiple things, packed into there. One of the questions is, can you apply for both loans? Can you apply for the same loan to multiple places? On whether you can apply, whether there's any issue between the P3 or the EIDL loan, as I said before, no, there shouldn't be a problem. I think one of the practical things that we have been hearing is all of the SBA's resources have been put on this P3 loan. So not surprising if you haven't heard. So the EIDL loan is you apply directly to the SBA itself, as compared to the P3 loan you're dealing with with a commercial bank itself. So again, we've heard that all of the SBA's resources are on these P3 loans. So not surprising that the EIDL, there's not a lot of activity and traction there, right? Right or wrong, that's just, I think that's what we're hearing. As far as whether you can apply through basically through multiple banks. There's not clear guidance on it. The one thing we do know is, and I think the application says, you've not received P3 money elsewhere. You've not received it from another bank. We have heard that certain banks are better than, certain banks have been better at others and responding and keeping you informed about whether whether your application's going through, been accepted, whether they will accept you, because the banks have put sort of have put their own, have decided for themselves how they want to sort of administer these loans and these applications. So each bank is different. So you may have found out after the fact that the bank you're dealing with doesn't make loans to businesses smaller than 100 people, or they don't do bigger than 50 people, and you fit within that category of what they decided they're not going to service. So I think the answer is yes, you can apply, and again, you might try and disclose that, because the last thing you want to have too is that your application gets hung up because there's this question about, oh, well, they applied over here and they applied over there. Which one do we follow? We don't know. So I mean, there's not great guidance on it, but I think the matter of, if this is money that you need, you go banging, you go knocking on every door of every bank that that you want to apply through and you think is the right avenue for you to apply through.
But you only take one.
So again, you only take one, right? Is that what you said?
You can't take more than one.
Correct.
You only take one. You're absolutely correct. This company says we have a cloud computing for our company. Would that qualify as utility category?
I saw that in the Q&A, and that's a good question. I would give it a try. I mean,
assuming that's a larger number, assuming the reason for that is because it gives you a larger number of employees or a larger revenue threshold or something.
I think the question is whether that's an eligible utility expense for forgiveness, Mark.
Oh, sorry.
And
okay.
Gotcha. It's not an outrageous interpretation, I don't think. I do expect, and they have given indications that there will be more detailed guidance on forgiveness to come. I think they're focusing now on eligibility and getting the loans out. And once they have some time, will provide us with more details on the forgiveness criteria.
Okay. Our next question is, I've been paying my employees out of pocket, giving them part of what they used to earn. Once my business gets the loan, can I use the money to pay them the difference?
So again, I think that's a matter of, effectively, you've kept them on payroll, and you've cut their salaries to, in order to keep them all, you've cut their salaries, and I think that goes sort of into that savings piece, where if you've done something because the monies weren't available, you can restore them by paying them those dollars back using those loan proceeds. I think the answer to that is yes. You can fix that problem as long as that problem was created between the February 15th and that late April date of the 26th or so of this month. You don't have to restore them within that period. That's just the period of time in which those cuts were initially made, and then you have the obligation to restore them by that June 30th date using those loan proceeds.
Okay. The next question I have is, will business owner who has filed a Chapter 11 bankruptcy more than 5 years ago still be qualified for a loan? And the same person had a previous loan through another different corporation that's not active anymore.
There are some rules around eligibility for these loans, including I think including felonies. And I don't remember if bankruptcy is is one of them or not, but there are a set of rules that clearly defines if that would impact eligibility, and there is usually a time frame associated with that. So I think I've seen specific kind of frequently asked questions saying, just because you've run afoul of these issues at some point in your, in your business life doesn't mean you're necessarily disqualified from, from applying and qualifying. So I would take a look at those rules in particular.
Okay. I know we're just a little over on time. I'm going to try to get a couple more questions in here. This next question, I had 20 employees on March 15th. I laid all of them off temporarily, and that day, temporarily closed my restaurant. If I reopen April 15th and get a loan, what is the number of employees used and the date used for me to begin my forgiveness computation?
John, you want to try that one?
All right. If the loan is, assuming you get the first disbursement of the loan on April 15, then they will compare the number of employees and wages from April 15, the period from April 15 until 8 weeks after that, which would be roughly June 15. And they would compare that to either the number of employees you had from January 1st, 2020 to February 29th, 2020, or I think it's February 15th, 2019 to June 30, 2019, depending on your choice for the comparison period. So the fact that you furloughed the employees from March 15 to April 15, I think was the question. As long as you made that up, the head count up, and wages up to 75% up by June 30, then that furlough would not count against you.
But I think I would add to that. I think we heard in that question either the business may have stopped operations. Again, I think you would have to have because the monies that would come in, should be spent during the 8-week period, from the date that the money does come in. So you would need to at least put those employees back on the payroll in order to make those, in order to spend that money on them. And again, 75% of the loans that you do receive have to go for that purpose. So you would need to have them, hired back.
Okay. The next question is, are the fees paid to your payroll service, such as the fees they pay corporate payroll services, are they included in your payroll costs or in your operating expense?
Let's go back to the. Let's go back and see what the what the chart says. Again, there's probably not a perfect guidance on that, and I think again, I guess there are two ways to assess that: what you can spend your money on, right? A qualifying use, so payroll costs. Cost of group health insurance, rent, utilities. I don't know. I think payroll costs are, a more amount of, kind of the salary and benefits. And then over here, we talked about what they constitute. I don't necessarily see something here that indicates it, but again, there may be more guidance on that. But
okay.
Right now, I would take a conservative view of it. It goes towards the operational costs.
Okay. If you someone read that even if the PPP loan is forgiven, that they still have to pay back the interest at 4%. Do you know if that's true?
So I think a couple of things. I think the interest rate was originally set at a limit of 4%, and then it was determined that that rate would drop to 1%. So it has been, that rate is no longer 4%. If you are forgiven, again, there's guidance. I can't remember. I think it may be through those FAQs again on the Treasury site, indicates, and it actually came from Secretary Mnuchin as well when he gave a press conference, that to the extent that the principal is forgiven, the interest is also forgiven. So it really becomes a no-cost loan to you if you're eligible for the forgiveness piece.
Okay. And do qualifying payroll expenses include workers' comp? I don't know if that's 5.
It cannot go towards a payroll cost.
Sorry, cannot, did you say?
It cannot, correct.
Okay. There you have it.
Okay. Let's see here. Sorry, I was trying to get questions that were different. Same question. This customer, we had an unusually busy 2019, thus inflating our average monthly payroll for the year. At the full 2.5% of payroll rate, we would be unable to meet the 75% requirement of payroll for loan forgiveness. Is it safe to assume there would be no issue obtaining the loan for a lesser amount?
I think that's maybe very similar. I think it was the first question we received, in the sense of you may be eligible for more money than you're able to that will be able to be forgiven. So again, I think as long as you're disclosing that, what's going on, your tests are consistent with what the with what the guidance is on how you test. One, either yes, you can apply for less. Two, you can give the money. You can prepay that portion of the loan back, immediately. Or three, again, I don't believe it doesn't make you ineligible for the loan. It just decreases the amount by which forgiveness will be given. So you would have a 2-year loan at that, I presume, that 1% rate is the way that I would look at that.
Okay, and I think this question is for Everett. Does CPS help with the required payroll paperwork that we will need to file the PPP? Their bank, which is PNC Bank, has been having trouble accepting the paperwork they filed.
Yes, we can provide you with the payroll reports that you'll need. Part of that could be your quarterly returns that they're requiring. So just give us a call at the office, yes.
Okay, and looks like we're just about 10 minutes out, so I'm going to ask this last question and we'll have to review the other ones offline. Our bookkeeper forgot to include the healthcare benefits paid by the employer. Can they change the amount of the loan once they're contacted to increase it in this case versus decrease?
I think the answer to that is to try and also submit. And again, if that is your banking relationship, I think it was PNC, I would go through your banking relationship and say, hey, look, we forgot, it's clear we forgot these calculations. The one issue I will say, it's been documented pretty clearly, is there's one shot at this loan, in the sense of you can only make the loan, receive one loan, meaning even if you asked for 50% of the amount that you were eligible for, because you said, okay, that's all I think I really need, I can make it through without taking out a bigger loan from you, and then later on want to try and apply for the other 50%, you can't do that. So again, in the same situation, I would try and get that in the current application. How is probably a little bit difficult, because so much of this process seems to be automated, where the banks are accepting your applications online, so it's not like you're dealing directly with somebody. And that's why if you're going through a bank where you have a relationship with, I'd call that relationship person and help see if you can supplement your application.
Okay. Well, I'm going to go ahead and cut off our questions here because looks like we could be here for another hour otherwise. So we will look at some of these questions, and on our corporate payroll website, we will let you know if we can get some of these questions answered and get a link to you or not. We definitely appreciate all of our customers for participating today. I want to give a special thank you to Jaleesa, Mark, and John with Smith, Gambrell, and Russell for co-hosting this with us and getting this information out to our clients. This is very valuable, and we definitely appreciate your time. Effort, thank you on behalf of Corporate Payroll Services as well, and I hope that everyone has a wonderful day.
Thank you very much. Have a great day, everybody.
Thank you.
Thank you.